Well, let's welcome in Rahul Arora of Nirmal Bang Institutional Equities. Rahul, good morning. Great to have you with us here. So, what are you making of it, Rahul? I mean, it's every week is new and varied and entertaining, but prices have snapped back in a very aggressive way over the last 8-9 days.
Morning, Prashant. Thank you for having me on the show. Yes, I think the initial reaction may have been overstated on the tariffs. The pullback is equally surprising. I think what you guys were discussing before we just started our conversation is the reality. We are still in the midst of an earnings downgrade cycle. I think let's put it into perspective, Prashant. We're still in the first month of the fiscal. The whole year awaits us. Let's just break it down. I think if you look at banking, at best we'll do a 10-12% earnings growth this year. Consumer staples will be lucky to do that. Reliance will probably be around that 10-12%. And IT is a big question mark because I think we'll get more clarity in the Q1 results about how the year is likely to shape out vis-a-vis what we've already seen. My sense is this is 75% of the Nifty. I'd be surprised if this 75% gives you 10% plus earnings growth for this year. The balance 25%, even if it grows at 15%, just on a weighted average basis, you'd be lucky to get to a teens earning growth for FY26, which basically means you are still, as I said, in an earnings downgrade cycle. Now, the point is at 27,000 Nifty, the valuations were at whatever, 23, 24 times. It dropped down to 18, 19 times depending on where you were. But I don't think the extent of earnings cuts has been factored in. So it is very possible that in a month or two from now, the valuations, even if they're at 24, start looking very similar to what they were on 27 because the denominator gets cut to that extent. I still think that this is a great rally, honestly, to be selling into. There is no justification for it to have bounced back. I think pretty much everything that the market wants to know, it knows. It knows that the worst of the tariffs is behind. It knows the Fed will probably cut another 50 bips. It knows the RBI will probably cut 50 bips. The US yields have factored that in. The Indian bond yields have factored that in. The one interesting thing, Prashant, we were looking at the data for the last 10 years of which asset class has delivered the best returns. And for as much as people diss gold, 7 out of the last 10 years, it's been in the top 3 in terms of best returns of asset classes. And 4 out of the last 10, it's actually been the best performer. So I think even from an asset allocation standpoint, a little bit of movement into the yellow metal may not be a bad option at this stage. So,
even now, after a 35-40%.
Yeah, so we actually hosted the World Gold Council executive strategist for our institutional investors just after the tariff announcements were made. And he felt that gold could return 15-20% this year. It's up about 8-9%. So you're still talking about a 10% plus growth. Now, superimpose that, can you potentially get 10% on the Nifty from here, which is basically taking you back to new highs? So that's the call you have to take. I'm not saying go all in into the yellow metal. I'm just saying that some amount of diversification, given that valuations don't look as cheap. You were discussing Blue Star. Look at that. Just look at that space and where valuations had gone.
Which is why, Rahul, and now what you're saying, we've actually, in the last 24 hours, 3 or 4 market commentators have made that point as well. Vikas Jain's call this morning, the CLSA call, was exactly that India is benefiting from the TINA factor. Flows are coming in, but the earnings reality is something that people have perhaps ignored. I remember Dheeraj Agarwal from Ambit making that point on the show earlier this week as well. So that question, I mean, what is the earnings reality? And with that in mind, would you expect the market can at least get back to the previous highs? What is the upside from here?
So at the outset, Surabhi, let me tell you, I'm very shocked to see that the market is where it is. So if it goes to new highs, I'll be even more shocked. So it's as simplistic as that. Like I was telling Prashant, I don't think the earnings reality is more than, you'd be lucky to get to a teen number. And I think even if you look at banks, which is the big elephant in the room, I don't think you'll get to a teen number even in FY27. Now, in that backdrop, keep aside IndusInd because of what's happened. If you look at Kotak, ICICI, HDFC, they're all back into that 2.5-3 price to book. Now, for the ROA and ROE profile that they have, this is more than price to perfection. If you're going to look at growths of 10-12%, why should you be paying more than 2.5-3 times price to book on FY27 when you're sitting at the start of FY26? So it is going to be challenging. But then, as you said, if flows keep coming in, it's what took the Nifty to 27,000. I think the tariffs were just an excuse, Surabhi, to reset valuations on the way down. So while the movement may have seemed exaggerated on the tariff news, the stock prices were not misbehaving irrationally. There was a genuine reset required. The market just latched on respond to that piece of news to reset valuations to a very large extent. That being said, I still don't think they are anywhere close to favorable in consumer staples, in IT or in banks. I think in all these three, then you cannot give a screaming buy. Indecent seemed like a no-brainer after the news because the valuations had dropped to rock bottom and the bank was not going anywhere. It was one, news item or whatever for the size of the bank. But those kind of trades will be few and far between. This rally has been led predominantly by banks, if you see. So the question, I would be more positive on the FSI space, not the B space. So I would look at auto finance, I would look at life insurance, I would look at general insurance, housing finance companies. So anything NBFC, because growth is still there, valuations are not cheap. You were discussing Maruti's numbers today. Take a look at when Chola's numbers come in today. They'll be growing 25-30%. So then they will get the valuation. It's as simple as that because market wants growth. So stocks may get mispriced on the way up as well. Look at what AU Small Finance Bank did. Remarkable set of numbers. So in an environment like this, if you have companies that are growing in the FSI space, you don't have to be overweight the B. You can sort of be neutral to underweight and go slightly overweight on the other aspect. Is the way I look at it.
All right. Hi, Rahul. Good to hear your thoughts this morning. And clearly, you're sounding a little bit cautious, actually, because earnings are not going to pick up. You've seen a good run. And as you said, maybe this rally could be a good one to sell some stocks into. That said, do you believe that the lows for the year are done? Or do you think we can go ahead and revisit that? Because the globe is still in a flux. And earnings are unlikely to pick up to those mid-teens at least in this year. So do you think we revisit the lows?
I don't think we revisit the lows, Nigel. I think that the low that you had of about 21.7 or thereabouts, that will hold. Okay. I don't think we're going to break that. Now, can you retest it? India has gotten into a bit of a tussle with its neighbor in the last couple of days. So we don't know how that's going to pan out. That's an overhang on, whether there is a market risk associated with that. I was just reading Trump has put a couple of days back 3,521% tariffs on solar imports from the Asian region. So if these kind of irrational statements keep coming out, you may have, gyrations on either side. But I don't think there is a reason to retest those lows. But even if you do, I don't think they will break. So I personally think you're probably going to be in a situation where you'll take out this year in a broad range of 22 to 25,000 on the Nifty. You're at the higher end, which is why I said it's probably not a bad time to be taking money off the table. That being said, it's not all gloom and doom. There are still pockets where money can be made.
So give us a couple of those top buy recommendations. And as you said, you're splitting it up between the B and the FSI. So that's one space you like, the FSI. But if you had to give us a few stocks, top 2-3 stocks that y'all as a house are looking at.
So I think, Nigel, if you look at it top down, I think the only two sectors where we can, apart from, the one that I mentioned on the FSI side, the only two where there is revenue growth and visibility is consumer discretionary and defense. Rest, nothing else seems like it can potentially give you that kind of returns from a growth and evaluation perspective. So within the FSI space, like I said, AU Small Finance looks good. Chola looks good. Max Financial looks all right. Even something like a Lombard or a Star Health. I think that, those are some of the stocks. Muthoot also could potentially be looked at. So I think those are some of the names on the FSI side. On the consumer discretionary, I think Alcobev is going to do really well. I think you've had a good run in UB and UNSP in this rally. Both are up 15-16%. But my sense is that they could still reset another 20% from here. Chalet Hotels looks interesting. We've obviously been positive from Indian Hotels standpoint for a while, but I think on a relative valuation. And in defense, we had upgraded Solar about 2 months back. The stock's done really well in the last 2 months since that upgrade. So I'll probably be forced to downgrade that to a hold, but because valuations, I've seen some of my competitors have initiated at 70 p. So, that tells you that you're in irrational domain when you're valuing capital.
Is this?
Solar
Industries. So, but I think solar is a good structural play. Hindustan Aeronautics. I think the one thing, if you look at the last 2 months, if you combine Army, Navy and Air Force, there is really 1.5 lakh crores worth of orders that's been awarded. So I think, Hindustan Aeronautics would probably be our top recommendation.
Valuation still okay after the correction?
On a relative basis, yeah. I think in order of preference, I think MDL also goes up there and we could even look at a BL or a BML. I think these would probably be the stocks that would probably do well. And from private sector, if you will, probably something like a Data Patterns, but not much else to look at in defense. Because I think all of these companies that I mentioned, we're reasonably confident of them growing between 18 to 25% on our numbers. And they'll have about a 300 to 500 basis point swing on the ROE and ROC. So on that backdrop, we're fairly comfortable sort of buying into these stocks and sectors.
Well, I recall we had the management of Solar Industries when it fell to around the 9,000, 8,500 level. And Mr. Manish, I think he joined on the channel and he said, no, we're confident that we will grow at the clip that the street is expecting.
This is the Pinaka orders, right?
Among others.
Amongst others. By the way, on a lighter note, today is a Friday. Movies, right? Do you guys know what movies coming out today?
I don't even know.
I know that case.
Oh, I know which one. This is the friend mentioned this. Andaz Apna Apna is re-releasing. See, all these kids from the 90s, all of us would know about this.
It's an iconic one. I don't know if you just...
You know, it's so funny that this movie actually bombed at the box office when it released. As did Agnipath.
Epic of our childhood.
There were so many of these movies that became cult classics later. But I think that's, when you talk about retail, I think it's an interesting one that you raise, because, you know, we do get asked this a lot as to why, you know, retail and movies are struggling. It's a push and pull. So most of these cinemas are in malls. So if the footfalls have dropped, it is going to have an impact on retail. And similarly, if people are not going into shop, they're not going into watch. So it's a push and pull, if you see, and both are actually struggling. And if you see, even in QSRs, dine-in is struggling, but delivery is not. So I think there is a genuine challenge getting people out of their houses. It is getting seen. And you've seen how Trend's numbers have, you know, the way the stock price has corrected as well. So,
you know, last Sunday I was at Phoenix Mall, and which is a low parade for those who are not familiar with Bombay. I mean, I don't know, planning to watch a movie, but I had 2 hours to kill. I had to, so I went to PVR, saw a movie, an English movie called Sinners. No comment about the movie, but it was, I think occupancy was not even 20%. It was a Sunday. And Sundays at one point, it used to be, you know, you'd struggle to get a ticket. It's a decently rated movie on IMDb, etc. So I don't know. I mean, some of these re-releases maybe do better, especially because, you know,
I think you guys...
Content has become an issue, and I think the one thing that has changed, and I think that's the reason PVR stock hasn't done too much, is this release window between theatrical and OTT. So, you know, it's now down to what, 6 to 8 weeks, I think, somewhere around that. People are, unless it's, you know, like for people who have kids,
larger than life
like you have a, you know, a Titanic or an Avatar or a Bahubali kind of movie or a Sholay kind of movie, which you have to take in the cinematic experience. People are okay waiting. And I think, you know, I was just reading somewhere, of course, this may not apply to the mass you know, it may not apply en masse, but Suits is coming back through Suits LA now, you know, with Harvey Specter back. Now, if somebody is a fan of that, now just imagine the binge watching. You know, I'm just giving you an example. So it's content. Content is not just getting.
This is a good cue.
So content is not just getting rehashed on cinemas, but even here. So that's probably the only part of consumer discretionary that we'll probably be underweight on, which is the movie space. But who knows? I think
I watched Interstellar last, and I think now this is going to be.
I think you guys should watch Raid 2 next week. If you all want to go, we can go together. And I'll tell you, Raid 2. Raid 2. And I'll tell you all in the break why I'm going to watch it.
No, he has to say all in the family. There's a disclosure.
Since we're talking about movies, I'm going for sure.
There is a famous line in Khalnayak, right? All in the family. That's what he's going to tell you in the break.
All heart.
All right, Rahul, fabulous conversation as always. You've lightened up our Friday. Thank you for stopping by.
Thank you for having me.
Though, of course, the caution on the market is, of course, very well taken.